Rising costs and recession fears are shaking up the business world.
The state of the economy is impacting how consumers and small business owners are planning for their futures. A recent survey by Goldman Sachs found 93% of small business owners fear a recession. 89% say they're affected by inflation, supply chain issues, and workforce issues. Despite the gloomy outlook, Goldman's CEO David Solomon is encouraging people to stay positive.
Inflation is obviously concerning, and like everyone else in America right now, they're concerned and watching, but at the same time, really trying to focus on investing and growing their businesses. And I'm giving them that same kind of advice. I think it's a time to be cautious, but you also have to take a long-term view. We will get through this.
David Nelson, Chief Strategist at Belpointe Asset Management, joins us now for more. David, welcome. Great to have you with us. So we just heard from the CEO of Goldman Sachs saying that now is the time to invest to grow your business. Do you agree with that?
We certainly are here. And I understand the comments that came in there. It was, at the start of the year, probably the biggest fear was inflation, as he said. We had a very aggressive Fed. They were hiking rates to tamp down inflation expectations. 6 months later, though, the bigger fear is, of course, recession. And markets have largely been signaling that all year. And to David's point, the good news is that the consumer is still strong. The bad news is that the consumer is still strong, and unfortunately will force the Fed to keep tapping on the brakes to bring down these inflation expectation fears.
Well, let's talk about job numbers here. The Labor Department's job reports include a number of measures: unemployment claims, hiring rates, wage growth. How important are those figures as an indication of how the economy is doing overall and the likelihood of a recession?
I'm not sure it matters if we're in recession or not. I think a lot of Americans already feel that, and it affects their spending habits. We're starting to see jobless claims slowly start to rise. Fortunately, at the start of the year, job growth was pretty strong, but we're starting to see some cracks in the facade. In the last several weeks, we had some of the largest companies on the planet, Alphabet, Meta, Microsoft, in particular technology companies, all announced that they're either slowing down hiring or reducing spending. And yesterday, we had Apple actually drive the Dow down 550 points from the highs into the red off of a story that they're going to slow down hiring and spending sometime next year. You got an Atlanta Fed that's already predicting that the last quarter came in at minus 1.5%. So that would put us in technical recession.
So, David, the jobs market has held steady despite this overall downturn that we're talking about. So do you see that changing anytime soon? Because once again, there's sort of conflicting indicators here. Now, we do see inflation, obviously, and these recession fears, but with a strong job market, that can't really be a recession, can it?
It can, but it's not going to feel like the word recession that a lot of people remember. You say the word recession, everybody thinks to the financial crisis. It's nothing like that. That was a serious event. That was a credit event. Some of our banks were insolvent. That's not like that this time. So we might have a recession this time around, but I think it's going to be a mild one.
All right. Well, I guess that's good news. If we're going to have one, better that it be mild than otherwise. So, David Nelson, thank you so much for your financial insight. We appreciate it.
Thanks for having me.